Now, how can a pension fund or a private equity be certain that the company that they are considering putting money in is truly sustainable and really contributing to the green transition? How can they have an informed decision? And how do you know that you're not entering the gray zone of greenwash? That is where our next and final speaker in this session comes in. Harald Francke Lund is co-founder and CEO of CICERO Shades of Green, a global and research-based provider of second opinions on green bonds. And I rather wonder whether green is the same in every region and corner of the world, or if that could vary from region to region. And how do you reach dark green in all sectors by 2050? I believe Harald Francke Lund is now going to take us through some of the tools that he and his team are using when they do their assessments. And I hope that you in the audience will take advantage of this moment as well to ask questions to him and the rest of the panel. So he's already here, but he still deserves a warm round of applause. Go ahead.
So thank you, Rutasri, for this nice introduction. We at CICERO Shades of Green, we see ourselves as the bridge between climate research and the financial sector. CICERO Shades of Green primary mission is to shift the bond market towards greener investments and improved transparency to avoid greenwashing without creating undue transaction cost for the financial sector. And we did the first second opinion for the green bond of the World Bank back in 2008. So this is not new to us. We have been in this market for many years already. We are now the largest provider globally in the market. Our approach, with our research-based approach, our approach is based on climate science and builds on close ties with our parent organization, CICERO, and its strong involvement with the IPCC. The research-based approach can be adapted to different issuers types across regions and financial products. It has already been adapted to climate risk assessment for companies, where the Shades of Green methodology is applied to revenue and investments streams, and is used for IPOs and also for the green designation of Nasdaq that they introduced in June last year. Green stocks. What is a green stock? Last year, we did more than 120 SPOs. Largest sectors are real estate, green buildings, followed by energy, renewable energy, but also banking, manufacturing, transportation. We just recently did Maersk and Wallenius Wilhelmsen, but also companies like Rebel, a company specializing in the second-hand market for luxury fashion. So it covers all sectors in all regions. The market has been growing for a long time, and it continued to grow also during COVID. Both the green market, but the ESG market in general, the E, S, and the G, so also the social part of this market has been growing. While it's difficult to define what is green, it might be even more difficult to define what is social. Early this month, SEB announced, just to give an example, that part of their ESG funds for April will be allowed to invest in companies in weapon production and defense because of the war in Ukraine. But this session is about what is green. Is it green to invest in a green building in an airport? What qualifies being green in the shipping sector? And the answer to this is a voluntary market. So it's the investors who decides what they want to invest in. So, but then you have some tools in the market to help the investor to take the right decisions. It's all about transparency. We have for a long time had some market best practice with the green bond principles for the bond market, where it doesn't define what is green, but it's very clear on what's expected on the transparency side, on the reporting, etc. But then also we had seen initiatives from the regulators. You have all heard about the EU taxonomy. The Chinese taxonomy was the first one. We got that in 2016. But now EU is also coming up with a taxonomy. We also have ESG providers looking at how green companies are. And also the stock exchanges are playing an important role. And for example, Oslo Børs was the first stock exchange to have a green bond listing. And in order to be listed there, you needed to have a second opinion on how green the bond is. On the ESG ratings, there are many providers out there. And of course, that could be a bit confusing for investors. If you look at and we like to compare ourselves with the financial ratings, they have been in the market for a much longer time. But new research showed that correlation is weaker for ESG ratings than for financial ratings, 0.61 versus 0.92 for financial ratings. And it's basically, we have already talked about Scope 3 emissions, and that's one of the reasons. It's both because they normally cover all social and green at the same time. They can have different approaches to that. But also, how do you address Scope 3 emissions? How do you rate a real estate company? Are you mainly focusing on energy efficiency, or do you also include emissions from material, etc.? Then Stine also mentioned this. It's really encouraging to see all these new targets coming up, and from many, many companies focusing on net zero emissions. But of course, there are also, it's not only about the target itself, it's what's going to happen. And that's what Stine said as well. So this becomes extremely important to follow up, and it will become, and Martin touched upon this as well, how are they reporting on their progress? And this is something that investors need to follow up. This was a report from a German think tank just recently, where they have gone through some of these targets, 25 of the biggest companies. And there are pitfalls associated with this. And one of our researchers, he was not involved in the project. Glenn Peters, he's, I would say, the rock star on climate science, more than 50,000 followers on Twitter. So if you want to be updated on climate research, I would follow Glenn. He knows a lot about scenarios. Then a final slide, just to say a few words, and that's where you asked me, Ruth, about our approach. We have, based on experience communicating to the financial sector, it's extremely important to have, it's all about communicating how green you are. And then it's important not to overcomplicate. Yes, data is extremely important, but it's also to have a language so that you can actually communicate. And I think we launched our Shades of Green methodology back in 2015. And for us, what is key is that question of whether something is green or not is not a binary thing. There are shades of green, similar to how the financial sector are looking at financial risks. There are shades of financial risks. So we introduced the dark, medium, and light green shading. And basically how we apply that is that if you fast forward to 2050 and you look around you and we have succeeded with the transition, what kind of solutions do you see? That's renewable energy, that's zero emission from transportation, etc. That's the same standard for all regions in the world. We expect all countries to go to zero in 2050. But then, of course, we don't have time to only wait for the final solutions. We have to start with what we have, the infrastructure, so we need to improve that. And that's where the light and the medium green shading also come into play. But only focusing on green doesn't give the full picture. So we have expanded our shading with a yellow and a red, where the red is what we need to stop investing in. And I think it was just yesterday, the platform of the EU Sustainable Platform actually now proposes to not only have a green taxonomy, but also include red activities and more yellow activities in the approach of the EU. So that's going to be very interesting to follow up on. Looking forward to the discussion. Thanks.